Good day once again. We are still in economics A level, size of businesses. Today we want to talk about demergers. I want to talk about demergers. What does demergers mean? It is not the same as a merger. A merger occurs when two or more firms come together to become one. That is what merger is. But here we're talking about demerger. So for demerger, it means a firm is splitting itself to two or more to become a firm. So let's read it anyway. Reasons for demergers. A demerger occurs when the firm splits itself into two or more separate parts to create two or more firms. The new firm will be of roughly equal size. Sometimes, though, the term is used to describe the sale of a small part of a business to another business. The merger occurs for a variety of reasons. So before we go into why we have the merger, what the merger simply means is that a firm, a whole firm, an organization, splitting itself into two or more sizes or two or more to become a firm on its own, a firm, an independent firm on its own. That is what the merger is about. So what are the reasons why firms will split into becoming a whole? So the first one is lack of synergies. When talking about synergies, what does synergy even imply? Synergy, what does it imply? Synergy implies to combine power or profit and so on that a firm will be, that organizations will be able to achieve working together rather than working separately. So the combined power, effort, profits that firms are able to achieve or will be able to achieve when they come together and work as one rather than working separately. That is what synergy is. So one of the reasons why firms might feel like or might be willing to split is because there's lack of combined profit, there's lack of combined power, there's lack of combined efficiency. So that is what lack of synergy is. So let's read. Many will feel that there are no synergies between the parts of a firm. This means that one part of the firm is having no impact on the more efficient and profitable running of the other parts of the firm. So what are they trying to say here? Synergy occurs when we have combined efforts, bringing about greater efficiency or greater results. But when there's no synergy, when synergy is lacking, an organization might be feeling that they need to split. And one of the reasons why they want to split is because they feel that one of the parts is not doing as much as the other more efficient part. So they feel like, oh, part A is not doing as more as part B. So they need to go separate ways. That is what they are saying here. So are having to divide their time between two or more businesses which have little to do with each other. So because there's lack of synergy, which means the part A is not doing as much as part B, there's no point being together. It means they have to go their separate ways. That is one of the reasons why we have the merger, lack of synergy. So the second one is about value. When we talk about value, what does value imply here? We're talking about the worth of the business, the worth of the firm. So let's see. The price of the demerged firms might be higher than the price of the single larger firm. For example, a firm may be valued at $300 million on the stock exchange, but if it's split into two, the new firms might be valued at $150 million and $250 million respectively. So what are they trying to say here? Sometimes the value, the worth of firms might bring about demerger, because if the firms splitted, one might be more valuable than another. So just imagine here we have a single firm worth $300 million, but if they are splitted, they might worth $150 million, $250 million respectively. And when you combine these together, it is around $400 million. So one of the reasons why firms might choose to demerge is because of the value of each firm. So they want to know the true value of a firm. And to know the true value of a firm, it might be based on the efficiency or the profitability or the potential in one firm that is not in another firm. So let's read further. Investors in companies base valuations on a variety of different factors, but one of them is the growth prospects of a firm. So what is the potential about growth for firm A if we are demerging from firm B? So one of the reasons, for investors, what they want is return on their investment. And for them to get return on their investment, the first thing they look into is the potential of growth of the firm. So if they find out that one of the firm, or if they find out that the demerged firm doesn't have that potential to grow, there's no point investing on such firm. So they would prefer to invest on a firm that has the potential to grow. That is the point I'm making here. So if a firm has a part which is growing fast, that part will be worth more than another part of equal size, which is growing more slowly. So the relatively poor performance of one part of a company can drive down the share price of the whole company, despite the fact that other parts are performing well. Financial markets talk about creating value by splitting up companies in this way. So what they are trying to tell us in essence is this: when a firm is not doing well, when a firm is not being efficient, when a firm is not that efficient, it is important to think about the worth of that firm. So for investors, what they look at on is how much more they are going to be able to get in their returns. And for them to be able to get better return on their money is through the growth potential of a firm. So based on what they said here, if a company growth is slow, the worth of such company will be low. But if a company has a growth potential which is faster, then the worth of such company is expected to increase. So that is what the point is here. So another reason why firms might demerge is because of their valuation. I mean, the worth of each firm. So if a firm worth more than another, so there's no point being together because it reduces the value of the firm as a whole. So there's no point being together as a whole. So it is better to have an accurate figure, an accurate value by splitting. So that's another reason why firms might choose to split. The third one, focused companies. He said in the 70s, it was fashionable to create conglomerates to diversify risk. When we're talking about conglomerates, we're talking about different businesses from different industries coming together. Having a conglomerate means you are able to diversify your risk. It means you are able to spread your risk. It might be educational industry combined with telecommunication industry combined with maybe information technology. So this is what we call conglomerates. And these things also help to reduce the risk that entrepreneurs might encounter. So that's the point about focused companies. So this idea, the argument is that management can deliver higher profits and growth by concentrating their energies on getting to know and exploiting a limited range of markets. Evidence also suggests that being the market leader in terms of sales tends to be relatively more profitable than being, say, number 3 or number 4 in the market. So basically what they are trying to say is managements are always cognizant, they are always putting eye on firms that are really profitable, because that is the only where they can always make progress and always grow. Equally, this can be seen as evidence that a company has only limited management resources. The part sold off would never have been successful within the particular firm because management did not have the time or expertise to make it succeed. So management would rather focus their efforts in a firm that is productive, in a firm that has the potential to grow, rather than firms that are not productive or that doesn't have potential to grow. So that's what they're talking about, reasons for demerger. So one of the reasons for demerger is lack of synergy. We talked about that. That means we talked about synergy, which means two companies coming together based on combined efforts, combined power, combined profit to achieve success rather than working separately. That is what synergy is. So lack of synergy might bring about demerger. 2 is the value of the firm. So the value of the firm we're talking about is the work of the firm. So the work of the firm might also bring about demerger. And the last one is focused company. And when we talk about focused company, firms, managements are always, they are always focused. They are always concentrating on businesses or firms that are profitable. If not, they just leave it aside. So what are the impacts of demergers? Demergers can have an impact on business, workers, and consumers. So here we have to talk about the impact of demergers on workers, the impact of demergers on businesses, the impact of demergers on competitors, on businesses, on consumers, on consumers. So we start with businesses. Businesses will benefit from a demerger if the increased specialization that results leads to greater efficiency. If firms are able to cut costs or develop new and innovative products, their profits should rise. So what they're saying for businesses is one of the reasons why we have demerger is because of inefficiency. So if a firm is able to demerge and the firm is able to do well, it means when we talk about doing well, it means it's efficient. So the efficiency of that firm will bring about economies of scale. The efficiency of that firm will bring about increasing profit. As a result, the firm will do well. So a firm might be able to do well, splitting than being together with other incompetent firms. That's the point I'm making here. So firms will lose out if the demerger leads to more inefficiency. If the demerged firms are run less well than when they were one single firm, then profits are likely to fall. So the problem about businesses, about demerger here for businesses is that if the demerged firm is not run properly, is mismanaged, then it will bring about inefficiency. And if there's inefficiency, profit is likely to reduce. So that is the problem about demerger for businesses. If the business are doing well, if the business are managed properly, it will bring about greater efficiency. And greater efficiency will lead to greater profits made. But if the firm is not managed well, then it becomes a problem. That is about businesses. Then we have to the workers. What are the impacts of demerger to workers? Workers may benefit or lose out following a demerger. Senior managers may gain promotion. For example, one firm only needs one senior financial director. If it splits into two, each firm will need its own senior financial director. On the other hand, some workers may lose their jobs. Following a demerger, if each firm becomes more efficiently run as a result of the demerger, then some job losses are likely to occur. So for workers are likely to be worse off, especially if you are not if the worker is not part of management. For managers, they might still be able to retain their work and even be promoted because a demerged company or a demerged firm would need different manager. But for workers, they might be losing their job because they might be surplus to requirements. So that is about demerger and its impact on workers. The impact on workers are strictly on subordinates. So most of subordinates might lose their job because they might be surplus to requirements. Then, for consumers, who are consumers? We call consumers the kingpin of any business. So how does demerger impact on them? I read, consumers may benefit or lose out following a demerger. They will gain if the demerged firm become more efficient, cut costs, and offer lower prices. So the first thing we're talking about here is this: with demerger happening, consumers are likely to be better off, especially if the demerged firm is run efficiently. If the demerged firm is run efficiently, costs will be lower, then prices becomes affordable for consumers. So that means they will be able to buy at a lower price. That is the point they're making here. They could also gain if the demerged firms invest more and develop new and innovative products. Another way they're going to gain, another positive impact is that if the demerged firm starts investing on innovative products or services, then it becomes good. It means quality services or quality products will be able to be consumed by consumers. That is another advantage or positive impact on consumers. However, consumers will lose out if the demerged firms become more focused on increasing profits in their business through raising prices or reducing their product ranges. The problem about demerger is that if firms focus on other aspects, if firms focus on making profits, more profits, then they might have to increase their prices. And when they increase prices, what happens? Goods and services become less affordable for consumers, so consumers becomes worse off. That is the point they're making here. Or probably a demerged firm might feel like they don't need to have large product portfolio. As a result, they reduce their product portfolio. And when they do reduce their product portfolio, it means consumers will have lesser choices to make in the market. So these are all about demerger and the impact on workers, the impact on consumers, and the impact on business themselves. So remember we said demerger occurs when firms split itself into different groups, different firms, to become an independent body. That is what demerger is. And we'll talk about the reasons why firms would want to demerge. One is through lack of synergy. Two is the value of the firm itself when as a whole and when they are being separated. And the third one is the focused company, which means management might focus on one aspect of the firm than the whole aspect of the firm, the whole body of the firm. And why do managers always do this, or why do management do this? Management always do this because they want to focus more on a firm that has the potential to grow, rather than the firm that the growth is slow. So thank you once again. So my name is Mr. Abdulatif Adebayo, the Business Tutor YouTube channel, and we talked about demerger. So in the next class, we move forward to, I think the next class will be about, the next class will be on business objectives. Thank you. You can make your comments through the comment section. Thank you once again.